Hey, this is Rod Cleef, and you are listening to the Mailbox Money Show with Bronson Hill.
This is Bronson Hill with the Mailbox Money Show. I want to ask you a question today is what are your goals as an investor? What are you trying to accomplish? I think this is really important that we start with really the end in mind. We don't just start and say, hey, I want to have piles of money and swim in a pile of money as Scrooge McDuck, the old comic book, would do, where he'd swim in is literally a swimming pool full of coins and money. But think about really, what is your goal? What do you want to do? Do you have money that you're trying to invest? Are you trying to retire? Are you trying to be able to travel the world with your family? What is really the why? Why do you do what you do? And so I have a good friend and mentor over the years, Christina Suter, is here with me today. We actually co-lead a meetup for the last 4.5 years in Pasadena. So if you're ever in town in Los Angeles area, the first Wednesday of the month, we have an awesome meetup. We're currently having about 80 to 100 people show up. It's been amazing. But one thing I love about Christina is she's always asking the question of how can I help you? Where do you want to go? What's your why? Because these are really the things that we're trying to solve. If you're into financial freedom, it's not about money. It's about what money will do for you. And it's about how it frees you up to be able to go after what you feel your purpose is. So Christina, really excited to have you back. You're the second returning guest we've had over the last couple of years at the Mailbox Money Show. So you and Jason Hartman. So Jason Hartman's a big deal. You're a big deal as well. And I'm just so grateful that you're here. I've been so grateful for the friendship and your support and mentorship over the years. So why don't you just say hello and tell everybody a little bit about what you do and how you got started in real estate.
So Christina Suter and I co-run the FIBI Pasadena multifamily meeting with Bronson Hill. So of course we get to see each other every month at that meeting, which is lovely. And I think one of the things I'm going to riff on for a minute, because it's just so important, is the why. Like Bronson, I've been running my meeting we have another meeting, FIBI Pasadena real estate versus FIBI Pasadena multifamily. And so they're two separate meetings and they each have their own trajectory. But I think what's important is it the why? Like I have a lot of people who've been coming to me for literally 11 years. I'm also a real estate investment advisor. So I specifically work with investors trying to create a passive portfolio or a direct ownership portfolio in real estate. And the question,
I want to say real quick, this is Christina's business. So if anybody needs like a consultant to help get started in real estate, I want to give a shameless plug for her. She's amazing. She will vet deals. She will help somebody. We've had people that are, net worth 5, 10 million, never invested in real estate. And she will help for us for a fee, help you get along the path of where you need to go. So just a little plug for what she does. So keep going.
Thank you so much. And it's for a fee. And yeah, it ranges I've worked with people anywhere from little as $250,000, who will hire me to help cultivate an inheritance, all the way up to $50 million worth of equity inside of a larger fund or inside of a larger structure. So it really is. And then, the thing is, it doesn't matter whether it's 250 or whether it's 50 million. They come to me and they go, Christina, tell me what I should invest in. And I'm like, whoa, let's this for a minute.
What's your hot stock tip? And you're right. Show me a deal. It's like, that's not it.
Love right now. What's the best indicator to invest in? I'm like, okay, I can answer all those questions, but let's stop for a minute, because the only thing that's valuable to you is getting the end result that you're looking for. So what's your why? And what's the purpose of the portfolio? Because you're not supposed to work for your real estate portfolio. It's not supposed to be overwhelming to you. It's not supposed to be running your life. It's not supposed to make you sick at night. It's not supposed to keep you awake. It's supposed to be serving you and creating a lifestyle that you feel is both peaceful and on purpose. And being on purpose, it can be a whole variety of things.
Let's take a pause there real quick. I'm sorry, I'm going to interrupt you a lot because you're saying some real nuggets and I want to highlight a couple of things. So what you said is 100% true, that, people can have all these big goals and things they want. I want 50K. I hear people, I want 50K a month and passive income by the time I'm whatever, or I want this amount here, but none of that stuff really matters. What matters is, what is it? What is this investment getting you? And we're really even above the investment. What do you want? And until you can really define what you want and who you are, you're not going to be able to invest effectively, because you're going to be like, oh, this looks good, or this looks good over here. And it's really about, and this is something I will say, I used to be an investment advisor, and investment advisors do this. I don't always like the way they do it because they're more in the box of traditional finance and the Wall Street, which, the Wall Street machine, which is like the matrix. And until you get out of it, you don't see everybody's living in the matrix, but having a plan, right? Having that plan set up of here's my net worth, here's how much income I want, here's what it'll let me do. And the why is a big part of that. And I love that you're able to kind of craft that. And I agree. I think before you invest in anything, you should have, and people dabble a little bit, whatever, but once you have a plan, it's so empowering because you know where you want to go. And that's what you do. I love how you do that.
Yeah, and it's I don't know if you did this, but you might, Bronson, because you're one of the few people I know. I mean, Bronson started a meeting one time. I was, because we stand up in front together, and Bronson started a meeting one time. He says, "You might think this is about real estate, but it's about transformation." And I just wanted to go, yes, let's speak to the universe. Like there it is, bottom line.
Yes.
You real estate, but let us inform you the truth is.
Yeah. Well, we talk about that, and that you get me all fired up here because, like, transformation is, when people do their first deal, like that's transformation. I raised $100K from an investor at our meetup, and that was transformation, right? Because I was like, oh, I could actually do this, right? When I did my second deal and I got a $40,000 acquisition fee or something, that was transformation. Like, wow, you actually can make money doing this. What in the world? And then when I quit my job a couple of years ago, that was transformation. So they happen at certain moments, but it's about transforming. It's the whole caterpillar to butterfly thing. What does that look like, and how do you get there? And so you are a transformation agent more than even just a coach or a consultant, but you help people become butterflies. That should be a good slogan for you, right? I'm a butterfly maker. Right?
Butterflies.
The Happy Hands Club over here, right? We're doing the Happy Hands Club.
We're flying off into peace and purpose.
This is too much fun on an interview, Christina. I've never had this much fun.
Never too much fun. I mean, so, okay, but I'm going to before I get distracted, let me double back to a point I wanted to get to, which is people will come to me and they're like, well, I don't know what my purpose is. I mean, you're talking about peace and purpose and these big concepts over here. And like, you might be a super spiritual lady. Good for you. But hey, I work a 9 to 5 or I did it, or like, like my mom was like, what are you going to do? Sit there and look at your navel fuzz all day long? And I'm like, well, if that's what peace takes, yes. This is besides the point. People ask me, well, what do you mean, Christina? And I'm like, look, there's a vision in your head. Bronson, you've heard this statement from me how many times? Do not worry for a minute. You're like, I don't know what my purpose is, so I don't want to talk to Christina, or I don't know what my purpose is, so I feel like I don't know what she's talking about. You do. There's a vision in your head as to why you're choosing to invest in real estate. If you are inspired to use real estate as an investment vehicle for you, you have a vision in your head that has inspired you. That vision in your head is part of what lends itself to your sense of purpose. Now, vision might be legacy, leaving it for your kids, might be making a difference in HUD housing, might be making a difference in being able to help underserved communities. It might be just being a good dad and being home, being a good dad, or for me, being a good mom, being home, being a good mom. The purpose, what's really your highest priority and your highest value, is buried inside of that vision. So don't you tell me you don't know what your purpose is. Don't you tell me you don't understand what you're doing it for. You do. You just haven't been willing to own it and claim it. That becomes transformational.
Yeah.
Understanding that, moving into that. Now we create a portfolio. Yeah, it's a bunch of data and a bunch of boring conversations about syndicators and direct ownership and proportioning out allocation plans of this versus that. All that might be boring, but it's all against the background of who do I want to be? How do I want to live? And what is my real estate portfolio going to give me?
So I know a bit about your story that you wanted to be a stay-at-home mom, and that's been your why. And you've been able to do that. You pick your daughter. I'm sure you're picking her up today from school, right? You're able to be that mom that you've always wanted to be, and that's been super important to you. What do you see for a lot of people? Like, what's a common why that people are like, this is really what I'm, like you said, people's vision. Can you think of a couple examples of just someone, traveling the world, or like, what are some visions people have, or retiring, or what are some like common conversations, or the common person you talk to, I guess, what age, what kind of stage of life? And
it almost doesn't matter what age. They might change a little bit based on age, but it really always boils down to their word is almost always freedom. And then the freedom to what?
To do underwater basket weaving. Right.
It's freedom generally over their time. I want freedom over my time.
Yeah.
I can do blank. Pick up, then that's where it gets very personal. Pick up my daughter from school, be able to be at every soccer practice for my son, to be able to take care of my mom as she's aging, to be able to travel the world and see the things I've never seen, to have a sense of security so that if I want to do nothing, I don't feel panicked doing nothing, right? So it changes what that freedom of time to do blank. The most important one I heard, which made a lot of sense to me, was integrity. And I went, huh, okay. That one was actually new, not freedom to, but integrity. I was like, what do you mean? And to be able to have my integrity be what leads my life, not my bosses, not my job, standards of my career or my industry, my integrity. And I went, aha.
That is an aha, because I think a lot of people too that we talk with, I've had over 1,500 one-on-one phone calls with investors, high net worth people, and a lot of times it's like a lot of people don't necessarily want to like leave and go just travel the world on a cruise for a year or so. Like, I mean, that's some people, but a lot of people are like, I just want to have the freedom to leave if I could. Because again, knowing that you could leave, knowing that your passive income covers your expenses, that's like the rat race number, right? It's covering, like, that's what I was able to do first. I was making 200K a year, but I figured if I was just able to passively or through investment income make 50, 60K a year, I was able to cover my living expenses. And then I got to where I was able to cover my income. And so it's like, if you can just kind of work your way along that, it does lead to freedom. And that's, again, that's kind of what comes up. The idea of financial freedom is really time freedom to do those things that you find meaningful. I know, Christina, one thing I really respect about you is that you've done so many different things in real estate. You've owned multifamily, you've done syndications, you've done flips, you've done private lending, you've done stocks, you've done, there's many, many more things that you've done. Let's talk for a minute about, right now, what are you seeing in real estate? Obviously, things have changed. Rates are high. I know you had some times where you sold a lot or all of your portfolio and did different things. What are some things that you're looking at now? What are some things you think are compelling for investors to consider now or to look at?
All right, so let me answer some version of the econ timeline conversation first, and then I can tell you what I'm doing.
Sure.
Obviously, what I'm doing is based on my opinion, and it is an opinion. It's not a fact. It is a guess, right? And it is I would say a partially educated guess, because I have a bachelor's in business and a master's in psychology and a teacher's credential. So let's be really clear. My education did not include a PhD in economics. I'm just saying, okay?
But you have a lot to say, and I respect what you say. So I want everybody to hear that. That's why you're back for the second time, is you have a lot of good things to say. So
I have a lot to say. I don't know if that earns me the right to come back, but
you got a lot of good things to say, I think. So that's why you're here.
So the things that I would say that, just to bottom line it is the Fed's not done. Let's just put it that way, right? The Fed's not done. The Fed is going to probably decrease more. We're not seeing nearly the amount of, forgive me, bloodbath that they want to see. We've seen some banks close. We've seen some bank failures. I understand that. In the 80s, when they were doing this, that last time they were facing really high interest rates, stagflation, right? Similar environment. That's why I've started studying the 80s first. By the way, we're doing an economic update in a month at FIBI Pasadena. And so I'm excited about that. So I'm starting my research. In the 80s, when we saw a similar dynamic where the Fed really was intent on getting inflation under control, and that was in the 80s, we saw 1,600 bank failures total in that decade. Between the beginning of the interest rate rises until about 10 years later, there was 1,600. So we're only at the beginning of that, right? We're seeing unemployment still 3.5%. I'm like, dude, I know our participation rate is low, but that's still way too high an unemployment number. Yes, we're seeing layoffs. Yes, we're seeing people hiring less. Yes, we're starting to see the softening that we need to see, but it hasn't gone through far enough yet.
Right.
Really create the stall. I mean, even the S&P 500 has only gone down by, 13%?
Yeah, it's really, you bring up some really good points, because they're trying to create pain right now, and they're not really able to do it because things are continuing to go well. Now, we're seeing the Silicon Valley Bank thing. Had they let Silicon Valley Bank or some of these other banks fail, it could have created a lot more pain, but it could have been like a 2008 kind of crisis. So, right. And we're seeing, one thing I just want to mention is as a real estate syndicator, so as a multifamily syndicator, we have not had any cash calls. We have not had any loss of deals or things like that, but we're seeing there's some distress that's starting to happen. A lot of groups that are getting in places where they need more money, and they're trying to figure out how they're going to make this work. We're seeing it. We're hearing about it. Where there was this famously 3,200 unit, $300 million portfolio in Houston, Texas, a few weeks ago. Every time this recording, I think there's rumors that one of the principals fled the country or something, and they foreclosed on the whole thing. And so I guess, but then we're also seeing the Fed backstop this stuff as well. So it's kind of like they want to cause pain, but they really don't want to cause the pain so I'm wondering if it's almost like you're trying to hold a sandcastle together while the waves are coming in, right? They're like, it's almost like they don't want the pain, but they really don't want the pain. Are you seeing that as well? Or is that something like, how do you navigate that?
I yes, and a little different.
Okay.
So they want the pain, but they don't actually want the whole economy to fall apart.
Right.
And so you just did an interview with Ted Green, right?
Yes.
Yes. And
Spartan Investments. Yeah.
It's Spartan Investments. And I think it's been released. I did an interview with him as well, but our audio was so bad I can't release it. But I want to give credit for this, right? Which is that there is a desire to cause pain. And they've not only increased the federal funds rate, but they've also torn apart some of the quantitative easing they were doing. So that's really sort of like this underpin that doesn't hit the news as much as that the quantitative easing, they've reduced that almost 100%. Right. So if you're not only increasing interest rates and now not buying bonds in order to utilize the bond market, now we're going to actually see a system that's free to be able to create the pain that needs to be created. Right. So I'm just saying.
That sounds so masochistic, right? Just create the pain, make it hurt, hit me, punch me, like kind of thing.
Here's the thing. The pain that can be created through hyperinflation, unchecked hyperinflation, is what they're avoiding. Which pain do you want? Right. We're going to have this pain. So there's a difference between monetary policy and fiscal policy. And I think it's very important to understand that it is our government fiscal policy. And I'm not having a political conversation. Do not put in the notes anything politics, political, guys. This is not a political conversation.
We'll just put the title. This is a political conversation with Christina. Just reach through here and strangle me or something.
Not talking anything about presidents, okay, or governors, anybody else. Gotcha. I'm just saying I've noticed with the amount of money that has been moved into the system under our presidency, and the fact that we've had tax incentives that have supported, flowing of cash into the economy, has created a ripe environment for hyperinflation. In a way, one could say we overfunded COVID.
Right.
I'm just saying, we overfunded the deficit we expected from COVID. We overfunded it. Now we have too much money in the economy. Now we're facing hyperinflation. Guys, I'm being very, very brass tacks, very, very bottom line. So don't you dare think that I'm giving you the right data, the actual data numbers. I'm not. I could give you the data numbers. We expected, I think, a $7 trillion shortage, and we only funded about 3.5 trillion up to 5 trillion with tax incentives of being able to support COVID. But we expected 7 trillion worth of loss, according to the EU and the International Bank. But it didn't happen. We didn't lose that much in GDP inside of the United States. So now we're effectively overfunded. I'm not trying to be complex. I'm trying to keep it simple.
Well, you bring up a really good point because, and I talk about this a lot. There's the inflationary factors such as printing more money, all these tax incentives, the COVID relief, all this stuff. There's just, 40% increase in the currency supply, M2, over a 2-year period. It's crazy, insane. I think inflation is at least 15% when it's reported that it's going down. It's only 6%. To me, it doesn't make sense. So those are inflationary metrics, but then you have deflationary things. If there's a crash of the economic stuff, there's some pain in different things. They're trying to actually create pain. It's harder now if you work in single family or doing flipping or doing other things. It's harder to get that going. So let's bring it back here for a minute because we could go super deep, and we do this at our meetup too. We go really deep in it. Let's kind of bring it back to someone starting out, someone who's like, hey, I've got 100K and I'm thinking about getting started. Is real estate a good deal anymore? Or is it time to wait? Do you say buy or do you say wait? Obviously, there's no specific advice, but like, what are you doing? Like, if you had 100K in your pocket, what would you do?
I'll be semi-specific because, I'm opinionated that way. But once I love how you're keeping us on track. Thank you very much.
Yeah, of course.
The second part of the answer was, what am I doing? So what am I doing? I'm waiting. Waiting. Why am I waiting? I'm waiting because I have cash available. I'm waiting because I'm liquidating stocks consciously and thoughtfully. I'm waiting to be able to buy direct, because one of the things, and now remember, I'm waiting for my purpose. Remember, we talked about a portfolio does not exist inside of a vacuum. It is not the highest and best return. It is the highest return inside the purpose of the portfolio. So the purpose of my portfolio is cash flow, because I'm the primary breadwinner in my family, and some appreciation, but a lot of asset protection. I'm over 50, right? And I don't mean to be a pain, but I probably have another 20 years worth of active investing inside of me, and then I'm kind of done with this. I've been investing for 35 years already. So I'm past my 50% mark in my investment horizon line as a professional in the field. You asked, I'm telling you. So
Yeah.
what I'm looking for is direct ownership. One of my favorite ways of investing, where I started, is kind of where I want to end, is direct ownership, but I want to end in short-term rentals. So I'm looking to purchase in Indianapolis, is one of the places I'm looking, because I already own there. And I'm going to start looking more actively in October, because I don't think the Fed's done. I don't think what the Fed has done so far has moved through the economy in a truly noticeable way. And I think the Fed's going to do another round. So I'm waiting.
Yeah. So you say, wait, and I've heard really smart people on both sides of this issue of what do I do? And like some people would say, well, wait, there's gonna be better deals available. Other people would say, well, no, because of, the cost of inflation. Because again, one thing I've looked at is interesting. I'd love to hear your opinion on this, that Bloomberg came out with an article, I quote this a lot, late 2022, and it said Americans have $5 trillion with a T, $5 trillion in bank accounts, which is 4 times the highest that's ever been there. So since COVID, it was 2020, they had 1.2 trillion. Well, now it's 5 trillion. It's over 4 times as much. So my thought is, if inflation is in fact 15%, there's obviously a cost. If let's say it doesn't take till October, let's say it takes another year and a half, it takes time. You do have the opportunity cost of, if values go down, you've just lost purchasing power. So there's inflationary factors of, hey, rents and currency, all this stuff's going to keep going up, because we have seen, even with real estate rates as high as they are, like they haven't, especially in LA or different areas, they haven't really come down much. They've come down a little bit, but there's been no crash. And so I'm kind of wondering, will there really be a crash, or will it be kind of like just this interesting time where, rates are high and properties values are stable. And then if rates start coming down, then real estate goes up a lot and everybody has the same idea to jump in. Have you thought about that as well? Or what are your thoughts on that?
Absolutely. So the national number from peak till now of the decrease in single family residence prices has been about 18%.
The average decrease
For the national real estate,
national average, okay,
is about 18%. So you tell me I've got 15% inflation, I've got 18% losses in real estate. I'm still happy in cash.
right? So because even though you're losing purchasing power, the asset that you want to own is you've actually done fine on that. Yeah. But you're not, but the other thing is you're not cash flowing. If you put the money in something, then hopefully you're also cash flowing.
I agree.
Yeah. So
it's still a wash.
Right.
It's in cash flowing. So for me, it's a wash. That's 1. 2, I'm looking to catch an upturn, right? A downturn, right? So that's 3. I can put my money to work short term, because I put out $210,000 3 months ago, and now they're going to sell the primary residence and I'm going to get it back. So I can put money out to work. I don't put it out at 15%, because that above 10 is usury, unless I use a broker, and then above 10 is not usury. But I can still put my money out to work. So it doesn't have to sit truly idle, completely in cash. It can be a shorter.
Yeah.
T-bills right now. I mean, you can put money out in T-bills.
Yeah, no, that's a great point. Actually, there is a case too for shorter midterm type of investments too. And we found some of our alternative stuff is, it's stuff that you get half your money back in 2 years, or, there's some other types of thing where your money's working for you a bit, but continue.
So, and then we continue, which is the part of the Fed's intention is to burn through that savings. People are going to need that savings, because that's part of what's creating the resistance against the Fed effects being effective is, but I have savings. So I don't have to go get a job. I don't have to be looking at those people who are not looking for jobs actively are working through their savings account right now. So there's a point that savings is going to be burned through. Just a completely same statistic, different look at it.
Huh,
right?
Interesting. So you think they'll literally burn through $5 trillion? That'll happen just, I guess, through inflation and through costs of things and
costs of living. Yes.
Wow. Over a year, over a couple of years, or you think it will take?
I couldn't tell you how fast. I haven't done the numbers based upon population inside of the United States.
Right.
You think about how much it grew. How many years did it take to go from 1.7 to 5 trillion? I heard at one point it did hit 7 trillion. So 1.5 trillion. How many years did that take? Think about how many years it would take to unravel it.
Yeah, it could take a while. We got time for maybe 1 or 2 more questions, and we've got to kind of wrap up. And I know if you want to hear Christina more, she has a show as well. So we'll get into kind of your podcast as well. You have a show that you're doing. Let's just go real quick. I wanted to talk touch on a couple things that you look for. You've had a lot of deals, and I trust you actually like getting in and reading these 100-page documents, 200. But you like getting in and doing and digging in. What are a couple things, in a real estate deal, an alternative deal? Like, what do you look for in general? Maybe you give a couple high level things, 2 or 3 high level things that you're like, I'm looking for this general attitude of being conservative. Or I'm looking for like, what are some things you're looking for?
Okay, so I'm gonna sneak in one more comment from previously,
Sure.
and then I'll answer that question. A lot of people ask me, should I buy now? If you have a deal that makes sense, buy now, right? Go ahead, buy now. Don't be freaked out about the interest rate. The buy-in price is harder to fix. So if you have a deal that's got a good buy-in price that gives you want, go do it, because the interest rate is easier to fix. You can refinance in 3 to 4.
Adjust it later. Yeah, exactly.
So don't let the interest rate stop you from buying in when the deal hits the right number. Okay.
Yeah, I think it could be a good time to buy for that reason. That if rates, I mean, if we look, we don't know what will happen, but assuming rates at some point will start to come down again. Oh, I wish I had bought more when rates were 7 or 8.
Yeah, exactly. You want to follow what's the price. Does it monetarily work? Okay, my interest rate isn't something I'm happy with. I don't want a 30-year loan at 8%. Why would I buy now? Because in 3 to 5 years, you're going to own that house at the same price, but with a 4%, 5% interest rate on it. Okay.
Right.
So that said, let me go back over here. So when I do due diligence, which I do for myself inside of my own portfolio, I do for my clients, and now I'm a registered investment advisor. I passed my
nice. Way to go. Virtual 5. Yeah.
High five. Now I'm a registered investment advisor. So I will be doing for my clients when I have assets under management is I really do spend a lot of time. I read through all the pages of the PPM, all the pages of the LLC, all the financial projections. I actually read through the whole thing. And the reason why is because I'm looking for consistency. I am looking for the culture of the organization. I am looking because if there's any inconsistency, that is a problem, right? Because I want to know what I'm signing is the thing that they're actually performing to, and also speaks of how well are they at protecting their investors if they can't keep their own consistency. The second thing I'm looking for is the culture inside of the LLC agreement. Is it well balanced? Or is it, we don't care about you. You have no voting rights. You have no blah, blah, blah. You just really, we're just taking your money. We're going to do what we want with it. Or version of, if you're really mad at us, it takes a majority vote, but you can have a conversation about getting rid of us. Right. So there are things I look for in being able to give the investors not a lot of rights. I'm not trying, let's be clear here. I'm not cray-cray. I'm not looking for having ownership over the business. I'm not looking for having a lot of voting rights in daily activities. Right. I want to be passive, but I am looking for a culture that speaks to the investor while it also protects the entity.
Yeah. Yeah.
For a balanced conversation. The problem is those PPMs and LC agreements are created by lawyers, which may or may not be the culture of the organization.
Yeah, I agree. Right? Yeah.
So we got to talk to the organization. I'm also looking to have a phone call. And in that phone call, I want to establish 2 things. One, their history, which I also do in a background check, which I also do on Google. I also will look up, like, if it's a multifamily long-term hold, I'll look up previous buildings they own and the reviews from their tenants on previous buildings they own. I get all detective about it.
In the weeds.
I really enjoy it. But again, to confirm culture, right? Not just numbers. And then, of course, the conservativeness of the numbers themselves in the projection, right? If you're trying to oversell me, I don't want to be oversold. I don't care if it could perform better. I don't want the culture of you trying to oversell me. The last thing I look for, which is very hard to confirm and very hard to understand, is there a sponsor? Is there somebody in there who has deep pockets?
Yes. That is actually, I want to pause there for a second. Yeah. I've seen deals get in trouble because no one on the team can come in and help it out. It's, hey, we need $1 million, $2 million, whatever, and there's no way to do it. Versus if you have 1 or 2 or 3 people that are high net worth, they'll come in to help the deal. And I think that is huge. And that's why I think when people are starting out, if it's just like 3 guys that went to college together, hey, we're going to do a bunch of big multifamily. It's like, that's a lot scarier than like, okay, someone on the team is high net worth, has a lot of experience, has access to capital, which is huge. You mentioned culture several times, culture of the operating agreement or the operating company, culture in the LLC, seeing if everything is consistent, right? That consistency is huge. So we want to appreciate that. We could talk all day, and I know we're going to talk a little bit later, but I wanted to just really, again, highlight you as a leader that I respect, you, and a lot of people don't know this, but I had been doing real estate, with a single family for a number of years, but Christina was uber helpful to kind of get me going in that. And then also just to be a friend and mentor over the years as I got started. And I think having mentors and having friends and people that have gone before and have done things, her, 30 plus years of experience, or, 30 for whatever many years, you have so many years of experience. It's been uber helpful. So if I have a deal, I can run it by you. Or if I have, hey, I've got this person, what do you know about this? And reputation is huge. And so I just wanted to really affirm and appreciate you both as a friend, a leader, someone that people should follow. And you don't have a huge channel, but I think it's, we got to get you on your marketing going or whatever we need to do. But
I'm trying to catch up to you.
Yeah,
You're my idol when it comes to going from somebody who was a beginning investor to somebody who's deeply professional in the field, highly respected, of integrity, and really connected to his community. I'm like, I need to be Bronson when I grow up.
Well, thank you. I say, oh, stop. And I fan myself and ask for more compliments. But I thank you, Christina.
So
yeah, that means a lot. Well, I know we resonate a lot in a lot of, value stuff and whys and all of that, even faith and some personal things as well. So really appreciate that about you. Can you tell people about your show that you have, how people can follow you, how they can get in touch with you or reach out to you?
So Christina Suter, or Christina at ChristinaSuter.com. Suter is Suter, but ChristinaSuter.com is easy enough. And I do have my Real Estate Breakthrough podcast, which you can find under Christina Suter. I am on Instagram and Twitter and Facebook and LinkedIn, all under either Christina Suter or the real Christina Suter, because there is another Christina Suter on the face of this planet. So there's a real Christina Suter. But really, I think what's important is I try to put out something that is both real estate related and, like you, Bronson, something that's inspirational. We started the show with the concept of transformation and a sense of living life based on one's purpose. And what I try to put out to my community is that same real estate information, but also inspiration, knowing that really how you're choosing to live your life, how you choose to take care of yourself, is as much a form of abundance as any dollar bill will ever be.
That's an awesome. Well, Christina, appreciate you. Thank you so much for being here. Looking forward to catching up a little bit more, and encourage everybody to reach out. Thanks for coming in.
Thank you, Bronson.
All right, so lots of value here. There's so much that I get from Christina. I highlighted some of the points that I've gotten from her, but I think one of the things that over this whole interview that I've gotten is just the power of having mentors, the power of having people that have done many things before, that have 10, 20, 30 years of experience like Christina does, are huge. It's been said that a wise man learns from their own mistakes, but a genius will learn from the mistakes of others. Now, Christina once asked me when I was first starting, she told me, hey, before you buy anything, go walk 100 houses, and then you'll know what a good deal is. And I just remember being like, oh my gosh, that sounds like a lot of work, but it does. That's how you learn. It's just putting in the reps and doing it. And also, when you meet new people, ask, what's your greatest success? What was the biggest mistake you made? What would you do differently? And that's a great question when you're at a mixer, right? It might lead to some somber or a laugh or a chuckle, but those stories are uber valuable because you learn, what do I need to avoid? Half of this is not just what do I need to do? It's also what do I need to avoid from losing money? As Warren Buffett says, rule number one is don't lose money. So I hope you enjoyed this interview. We'd love to see in the comments, share this episode with others. If you haven't joined our investment club, we've got some awesome alternative assets you need to hear about at bronsonequity.com. Thanks for taking the time to educate yourself. Look forward to seeing you on the next episode of Mailbox Money.
You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.